Hello everyone. Today we will discuss the answer of money and banking. So let's begin. The first question in the exercise is, what is barter? The system in which goods are exchanged for goods is called barter, or you can also write the direct exchange of goods for goods is called barter. So let's see the next question. The next question is, what is money? There is anything which is accepted by all as medium of exchange is called money. So that means money may be anything, but that should be accepted by all as the medium of exchange. So let's move toward question number 3. Mention one important functions of money. The answer is, money acts as a medium of exchange. This is the most important function because money is a means of exchange. Number 4, give one example of non-legal tender money. The answer will be check money. Next, what is representative paper money? Answer is, representative paper money is an item such as token or piece of paper that has no intrinsic value but can be exchanged on demand for a commodity that does have intrinsic value such as gold, silver, etc. That means representative paper money may be a piece of paper also which should not have any intrinsic value, but if we give that piece of paper, then in return of that piece of paper we may get some goods which may have intrinsic value. So next question is what? Question number 6. What is a bank? So the answer will be, bank is a financial institution that deals in money and loans. So let's move toward question number 7. Question number 7. In which year was the Reserve Bank of India set up? So the Reserve Bank of India was set up in the year 1935. And if we talk about the first bank in Assam, that is Guwahati Bank, was established in 1926. So let's move toward question number 8. What is current deposit? Current deposits refer to those deposits which are withdrawable by the depositor at any time. That means the deposit which we keep in the bank and which we can withdraw at any time from our account is known as current deposit. Along with that, the bank normally does not pay any interest on this type of deposit. Generally we do not get, that means the depositor do not get any kind of interest on the amount that is deposited on the current account. Now we will start short answer type questions. Question number 1. How does lack of double coincidence of wants create problems in the barter system? Answer, the barter system does not work where there is lack of double coincidence of wants. The exchange between A and B in our example takes place because there is double coincidence of wants. Hope you remember the example that we have got in our lesson. A has rice, for example it is written here, A has rice and needs sugar cane, while B has sugar cane and needs rice. So here exchange can take place easily because we have seen here double coincidence of wants. So exchange take place between them. The problem will arise when A, for example, needs fish which B does not produce. Let us suppose that C produces fish but C does not want sugar cane. So exchange cannot take place in this situation as there is lack of double coincidence of wants. Question number 2 is, what is meant by store of value? Answer is, a store of value is the function of an asset that can be saved, retrieved and exchanged at a later time. Generally, a store of value is anything that retains purchasing power into the future. Now, store of value means to keep anything as saving for our future. That means if time comes in near future, we can use that thing to purchase any other commodity for our daily needs. If we are able to do that one, then we can say that that thing has store of value. Next question is, which characteristics of money is the most important one and why? So here the answer will be general acceptability, because it is the most important characteristic of money, as money is accepted as medium of exchange by everyone. General acceptability is the most important characteristic of money, because everyone accept money as the medium of exchange. So that will be the answer. Number 4, what is liquidity of money? Liquidity of money means direct and immediate convertibility of money into goods and services that the holder of money wants. That means if you have money, then that money can be used to purchase any kind of goods and services that you or we want. But there are many other commodities except money. Let's take the example of land or gold, silver. These things have very less liquidity. Money has more liquidity as compared to any other goods, because if you have money, then with the help of that money directly we can purchase goods and services from the market whenever we need. But instead of money, suppose if we have land and if we need to purchase some commodities from the market, then directly with the help of that land we cannot purchase the goods. At first that land should be sold, and with the help of that money we can purchase. So we can say that money has more liquidity as compared to any other commodities. Let's see next question. Question number 5 is, money is the common unit of measurement of the value of goods and services. Explain. Yes, this is very important question which is oftenly asked in exams. So money acts as a standard of measurement of values of goods and services. All economic goods are exchanged in terms of money, which we call price. Money is the common unit of measurement. The value of all economic goods and services are expressed in prices only. So if you see the first line, it is written, money acts as a standard of measurement of values of goods and services. So whatever goods and services are available in the markets, every item has its own prices. So whatever economics goods are there in the market, if we want to purchase that one, if we want to exchange that goods, then what we have to pay? We have to pay money. So we can say that money is the common unit of measurement. Whether you want to purchase any kinds of goods, any kind of services, for all the things what we have to pay? We have to pay money. Instead of that, we can't pay any kind of product or like that we did in the barter system. So let's see the next question. What is the difference between limited and unlimited legal tender money? Limited legal tender money is the money which is acceptable up to a given value of transaction. Example, coins. So limited legal tender money are those money which can be used to make transaction of a small amount. For example, coins. With the help of coins we cannot make some big transaction because it will be a burdensome. On the other hand, if we talk about the unlimited legal tender money, these are those money which can be used as a medium of exchange for transaction of any value. It may be of rupees 1 lakh, rupees 10 crore and so on. Example will be here cheque, paper money, net banking, etc. So let's move toward the next question. The next question is question number 7. What are the functions of the regional rural banks? The functions of RRBs are, number 1, it provides loans at a low rate of interest to the villagers, and it also make the villagers free from the clutches of private money lenders. And number 2 is to mobilize rural savings and invest these in various productive activities. So second function is what? That means regional rural banks, it accepts a saving from the depositors, and they use these savings for different productive activities, especially for the villagers. So question number 8 is, how are the non-banking financial institutions different from the banks? This is one of the most important questions from this lesson. The difference between non-banking financial institutions and banks are, number 1, The depositors can withdraw money from the banks through check, but depositors of non-banking financial institutions cannot do that. So in bank, with the help of checkbook, we can withdraw the money that we have deposited in our bank account. But in non-banking financial institutions, we cannot withdraw our money with the help of check. Point number 2 is, in case of banks, there is deposits insurance scheme to cover risks of the depositors. On the other hand, non-banking financial institutions do not have such schemes. In bank, the depositor get life insurance facilities, but we do not get, that means the depositors do not get any kind of such facilities in the non-banking financial institutions. Now long questions answer. Question number 1 is, explain 4 demerits of the barter system. Answer: the demerits of the barter systems are: number 1 is lack of double coincidence of wants. Barter system require double coincidence of wants, which we have discussed in the first paragraph of our lesson. Example were given about A, B and C. Hope you remember that one. So in absence of double coincidence of wants, barter system cannot take place. Next demerits is lack of common unit of account. The another demerits of barter system was it did not have any common unit of transaction like we have money at present. During barter system, each commodity has to be expressed in terms of value of another commodity, which was not an easy task. So the second demerits of barter system was it didn't have any common unit of account. Like at present, for whatever goods and services are available in the market, for that we have the price in terms of money. But during the barter system, all the goods, all the commodity has to be expressed with some other commodities. So it was very hard to remember all the value of commodities during barter system. Point number 3 is indivisibility of some commodity. Under barter system, small actions were very difficult as some commodities were indivisible. For example, suppose A, that means a person has an elephant and want a piece of bread from B, but A neither can give a whole elephant, not he can divide his elephant to get a piece of bread. So in such a situation, the barter, that means the exchange of goods, cannot take place. So it was the another demerits of barter system. So number 4 is difficulties on saving. The fourth difficulty of barter system was that there was no any easy method to keep the savings for future, as most of the commodities were perishable goods. So saving was almost impossible in barter system. It means if they want to save something for their future, they had to save some goods, but goods were generally perishable. Perishable means it had damage soon. But at present, with the introduction of money economy, if you want to save something for our future, then we can deposit the money into our bank account, so that whenever we need that one, we can withdraw the money from our bank account and we can purchase goods and services. But during the time of barter system, saving was almost impossible. Explain any 4 characteristics of money. So the first important characteristic of money is general acceptability. Anything can be considered as money, but people should accept that as the medium of exchange. What will be number 2 characteristics? Let's see. Cognizability. Money must be easily recognized and there should not be any difficulty in identifying money for transaction. The shape and size of money of equivalent value must be identical in all respect. That means the shape and size of same value of money should be of same structure. No, if one 10 rupee notes is like a ribbon, that means it's small in size, and if another one is big as the size of a register book, then there will be a problems of selection and rejection. So everyone will take the small one because it will be easy to carry from one place to another. So there will be a problem of selection and rejection. Durability means which can last for a long period. So money must be highly durable and should not be perishable. so that money can be stored up. So it is written that money should last for a longer time and should not get damaged very soon, so that it will be possible to store up for the near future. Next, explain four major functions of money. Number one is money performs the functions of a medium of exchange. Number two is money acts as a standard of measurement of values of goods and services. If we talk about point number one, money perform as the medium of exchange. Yes, this is the most important functions of money because it is the medium of exchange. Number two is money acts as a standard of measurement of values of goods and services. So whatever goods and services we have in the market, for all the thing it has a price, and the standard of price generally we call is what? Money. Number three, money acts as a standard of deferred payment. Now what is deferred payment? You see here, deferred payments are payments that are made later on and not at the point of time when the product or the services is delivered to the customer. So sometimes we purchase something but we do not pay the money on purchasing time, but later on we go to the shop and we pay the money for that purchased product. So such kind of payment which we made in future are known as what? Deferred payment. And all the deferred payments are made in terms of what? Money. Number four is money functions as the store of value. A check money. Give reasons for your answer. This is very important question of this lesson. This time in 2020 also I found this question in final exam. No, check is not money itself. It is just a claim against money. And give reasons for your answer. A check does not have the characteristic of general acceptability. Individual may refuse to accept payment in check. Yes, it is not money because money is generally accepted by all in all the transaction, but check are not accepted everywhere. If you go to a small shop where you purchase some goods of 5-10 rupees, and if you write a check to give that shopkeeper, will that shopkeeper accept the check? No, the shopkeeper will not accept the check. That means people can refuse to accept payment in check. So check is not a money, it is just a what? Claim against money, or you can also write check is not money, it is near to money. Let's see the next question. Explain four functions of central bank. Another important questions of this lesson. Let's see what are the function. Number one is issue of paper currency. The central bank has the sole authority to issue paper currency. That means in India, only the Central Bank of India has the right to publish paper currency. No other banks has the right to issue paper currency in India except the Central Bank of India. As I have already said, in India only the Central Bank of India has the right to publish paper currency, which is the sole authority of the central bank. Point number two, bankers to the government. The central bank functions as a banker, agent and financial advisor to the government. It maintains the accounts of central government as well as state government. So it is a banker to the government. That means sometimes if the government needs or wants some financial assistance, then the central bank can provide all these facilities to the central government. It also maintains all the accounts of central government as well as the state government. Point number three, bankers to the bank. The central bank also acts as a banker's bank. The central bank advances loans in necessity to the commercial bank. So whenever commercial bank needs any kind of financial assistance, then the central bank can offer loans to the commercial bank. Number four, credit control. Controlling credit is the most important functions of the central bank. By controlling the credit effectively, the central bank maintains stability in the internal price level. Sometimes due to inflation, the prices of commodity may increase. So to decrease that one, central bank plays an important role. It controls the credit by increasing its bank rate. Number 6, explain any two major functions of the commercial bank. Answer are: the first function of commercial bank is to accept deposits from the people. To encourage deposits, the banks offers interest against deposit. First of all, the first main function of commercial bank is to accept deposits from the customers, and to encourage deposits, it's also provide some interest on the deposited amount. Next, advancing of loans. Second functions of commercial bank is to provide loans to the public.